Housing data for the month of March just came out from Realtor.com, and let me tell you guys, it's simply not looking good for the housing market. This data shows some serious cracks for real estate, and it's a signal for prices to start reversing very soon. Now take a look at this. We got pending home sales falling by an average of 5.2% in all major areas of the country. I did take a look at all the data, and these are the states where pending home sales dropped the most year over year. We got Texas, negative 4.5%, North Carolina, negative 6%, Virginia, negative 6.6%, Georgia, 8.9%, Montana, 11%, Illinois, 10%, Florida, 11.2%, Arizona, 17%. And the list goes on, and believe me, it gets a lot longer. So what does this mean? Well, housing sales numbers are also going to crack because pending home sales are a leading indicator for housing sales. And according to Realtor.com, the areas showing the biggest softening in pending home sales were Jacksonville, negative 15.1%, Virginia Beach, negative 4.2%, Miami, negative 13.7%, in Memphis, negative 13%. But I'm also going to add a few more cities. We got Atlanta down 9.7%, Raleigh, North Carolina, 9.6%. One of the hottest housing markets during the pandemic, Salt Lake City, 15% negative in pending homes for sale compared to last year. And finally, Phoenix, Arizona, down a whopping 24% in pending home sales compared to last year. Folks, the market in Phoenix, in my opinion, is the most susceptible market for an imminent housing and pricing correction, maybe even more than Florida and Texas. But I do want to go back to Florida, where we're seeing every major metro area where pending home sales were down year over year. And these numbers are compared to March of 2024. Take a look at Tampa. Pending home sales were down 11.6%. Daytona Beach, 11.45%. We mentioned Miami, down 13.7%, Jacksonville, 15.1%, Cape Coral, Fort Myers, 9.4%, Port St. Lucie, 14%, and Pensacola, 12%. Now let's talk about inventory, because we're obviously seeing more and more inventory come in the market. Realtor.com reports that inventory of homes for sale rose 28.5% year over year, marking the 17th consecutive month of inventory growth. Sellers are gradually returning to the market, new listings hitting their highest March level in 3 years. Take a look at some of the states with the highest amounts of total listings or inventory compared to March of 2024. North Carolina, 36% year over year and 25% more homes for sale compared to the previous month. Georgia, 40% new inventory compared to last year and 20% new homes for sale compared to last month. Virginia, 39% year over year. Florida, 34% year over year. Nevada, 57%, and California, 49.5%. Again, more listings compared to 2024. Now, here's where the housing inventory is growing the fastest. According to Realtor.com, all 4 major U.S. regions posted inventory growth in March. We got the West at 40.3% more inventory, the South 31.1%, the Midwest 17.7%, and the Northeast at 11.3% more inventory. In March, the typical home for sale spent 53 days on the market. That's 3 days longer. The same time last year. This is also a 12th consecutive month where homes have taken longer to sell compared to the year before. Now, they're saying the national median list price of homes for sale in March was $424,900. This is unchanged from a year ago. The housing market has been pretty much flat compared to last year. We have gone 4 straight years of increased home prices to now pretty much a flat market. This is a turning point where prices are going to start dropping. Now, I do want to go over the data that to me is a third indicator for a reversal in prices, and that is price reductions. Now, Realtor.com reports that 17.5% of listings saw price reductions. This is the highest share for any March since at least 2016. And these are some of the states where active listings have been reduced in price the most, and I'm going to compare these only to the previous month. So I'm not even gonna go year over year. We got North Carolina almost 20%, Washington State 20%, Massachusetts 28%, Colorado 29%, California 25%, Virginia 32%, Jersey 36%, DC 32%. Now, likewise, these are some of the major markets experiencing the highest amounts of price cuts compared to the previous month. New York, 33.49% of all listings got a price cut. LA, 27.88%. Washington, DC, 46%. San Francisco, 57%. Las Vegas, 22%. The data here shows you that prices are set to reverse and they're starting to come down. So if you do have somebody telling you that prices are still going up, either they're lying to you. 2, they don't know the data. Or 3, maybe you are in a very, very small pocket where prices are really increasing or maybe stabilizing. But we can see data from across the country where that is not happening. And we can see this data is showing us a price reversion. Now, in the past couple of months, the National Association of Realtors have reported that prices have increased across the country, but that rate of increase is now lower and lower. And one thing that does not get talked about often is the number of people who are starting to be okay with the idea of leaving their COVID interest rates behind. And we're seeing this with the number of inventory that's hitting the market. On average, people are selling their homes every 7 years or so. Therefore, the majority of sellers who are listing their homes right now either bought their homes around the pandemic or took advantage of a refinance when rates dropped to historic lows. And we have yet to see the effects of the tariffs being imposed by President Trump, but in just 2 days since Liberation Day, the 10-year Treasury yield has dropped below 4%. This is the first time since August of last year, and obviously rates are going to follow. And if rates keep coming down more and more, homeowners with 3 and 4% interest rates are going to be more willing to trade up or trade down their homes and using their equity for another property if it means that their new interest rate is going to be somewhere in the 5s. Because it is a way easier pill to swallow if you're going to go from a 2 or 3% interest rate to a 5% interest rate. It's not the same thing if you go from a 3 to a 7. And what if we compounded these numbers with a potential wave of foreclosures in certain markets? Now look, don't get me wrong, we're not going to see the same amount or even close to the amount of foreclosures that we had after 2008, but it is a fact that mortgage delinquencies are increasing. And according to the National Delinquency Survey by the Mortgage Bankers Association, they state that the delinquency rate for mortgage loans on 1 to 4 unit residential properties increased to a seasonally adjusted rate of 3.98% of all loans outstanding at the end of the fourth quarter of 2024. And the delinquency rate was up 6 basis points from the third quarter of 2024, up 10 basis points from 1 year ago. The percentage of loans on which foreclosure actions were started in the fourth quarter rose by 1 basis point to 0.15%. The 5 states with the largest quarterly increases in the overall delinquency rates were Florida, 99 basis points, South Carolina, 59 basis points, North Carolina, 40 basis points, Georgia, 39 basis points, and Louisiana, 32 basis points. And also mortgage affordability. We got to talk about it because it is at the worst levels in decades. And with mortgage payments going up due to high insurance and higher taxes, more and more homeowners who bought a home in the past few years will no longer be able to keep up with those payments. Again, this is potential inventory that's going to come in here. If you're a home buyer, you should be licking your chops right now because there is going to be a ton of opportunity. In fact, there is already a lot of opportunity out there in a lot of areas in the country. Buyers are commanding the market. In some areas in Florida, you should be already seeing 10 to 20% lower prices compared to 2022. I am in the Atlanta and Miami markets, and I can tell you guys that our buyers are receiving seller concessions and they're negotiating the prices very successfully. And you couple this with lower interest rates, and folks, I'm telling you that in the next few days, we will see conventional interest rates maybe dip into the 5% range. FHA and VA interest rates are already in the 5s thanks to this severe drop in the 10-year Treasury yield. Bonds are rallying across the board, and this is a great time for interest rates. So if you're looking for lower prices, more inventory, lower interest rates, sellers willing to negotiate with you, then you should be keeping your eye out for an opportunity. All right, guys, that's basically all here for today. Thank you for watching the video. Let me know what you think about it, and let me know what you're seeing in your market specifically, whether prices are going down, staying the same, more listings for sale, etc., etc. And I will see you guys soon. Thanks again. Take care.